Let's get back to top picks, or get to the top picks. Mike, and just to reiterate, you don't hold these ETFs actually in the funds you manage because you play the underlying futures, for example?
Correct.
Okay.
So it gives us a clean view of things. I'm not conflicted by owning any of them or not owning any of them.
Okay, your first idea, the BMO Equal Weight Utilities Index ETF, ZUT.
Right, and I think what we want to capture here is that we are going through a period now where we have much higher volatility of inflation, and thus we're going to have much higher volatility in markets. And we want to own things that are either very complementary to the traditional portfolio or are going to demonstrate much lower volatility. As supply chains are broken and as the central banks around the world try and destroy demand, that has pretty significant implications for growth that are challenging. And we're moving from, just-in-time efficient supply chains that were cheap to resilient onshoring, redundant supply chains that are more costly. So the inflation build will continue. The volatility probably continues. So let's be a little bit more conservative. And therein lies the idea of buying some utilities. So the BMO Equal Weight Utilities Index, ZUT, is, just as it says, utility stocks in Canada. There are some other ones that are out there too. Horizons has a new one, but doesn't have enough AUM to be a top pick yet and is a little bit new, but worth looking at. Again, with low demand elasticity and reliable revenue streams that utility companies have, they tend to have higher dividends. It gives us that cash flow while we wait. And they tend to be a little bit more resilient to global shocks. And so this is why I suggest that investors look at this. It gives them that yield they like in Canada. They get to gross up that dividend on the tax side, and it should weather the storm.
Okay. Let's get to your next idea. Bullion. It's the iShares Gold Bullion ETF. Now, it's got a symbol of CGL.C in Toronto.
Correct. So we're going to buy this and we're not going to bother to hedge the US dollar. We're going to own it as just gold bullion. Gold is priced in USD. You buy it in Canadian dollars. Really, we're just looking for exposure to gold as an asset class that can help diversify your portfolio. This asset class helps protect against both inflation and deflation. Certain types of inflation, I will grant you. But both of those types of situations that tend to occur in low growth environments, gold tends to be a little bit more resilient. And so, as Ray Dalio said, if you don't own any gold, you may not understand economics or history. So there's a lot of compelling reasons to having some gold in your portfolio, again, doing that rebalancing that we talked about earlier. And this is, again, a more conservative call, thinking that we're going to be in for, a pretty volatile ride.
And then finally, one of your energy ideas here is the Horizons S&P TSX Capped Energy Index ETFs. So it's capped. I'm not sure. What is the cap? Do you know offhand, Mike?
Actually,
I can check it out.
I think it's 20%.
Okay.
But
carry on.
We can go from there. But yeah, here we have a play on energy. Okay, so and when we were on and chatting last in June, on June 27th, I did mention that the road is going to be bumpy, but that there is a longer term secular positive skew to energy stocks because of ESG and the environmental side of the ESG. We have underinvested in the production and development of oil and gas, of hydrocarbons. Mm-hmm. And this is creating this sort of tightness in the supply chain. And one of the reasons I think central banks around the world are trying to stamp out a little bit of this global growth, because they know on the supply side that it will be tough to deliver the amount of oil and gas. And as we escalate the situation in Russia, these things lead to sort of a long-term secular uptrend in these types of assets. So you're going to want to start to pick at these. Now, we had a wonderful opportunity this morning with everything, down pretty harshly, and they continue to struggle in this area. I don't think you need to rush. This is going to be volatile as we go through the growth shocks, as we move from an inflation shock to growth shock. And you're going to want to get this energy exposure, but don't be angry if it doesn't go up right away. It likely probably won't. but we don't know where the actual bottom is. So we got to start picking away at positions. If you had some and you sold it because you were rebalancing your portfolio, great. But this is a long-term secular trend, and we want to use these cyclical drawdowns in order to build our position or maintain a nice size position in portfolios.